The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the August 12th, the terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. Now, the easiest way to do that, well, is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. Excuse me. I want you to know that I'm absolutely grateful for your presence here. But more importantly, during this next 53 minutes, I'm here to serve you. That's assuming I can survive it. But I am, and I will survive it. So, if you've got some requests, go ahead and send me an email. Send it off early, steve@tfnn.com. Inside that subject heading, please put radio show question. Of course, if you're inside our Tigers den, well, then any and every ping will do. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we begin our day here with something other than a mixed bag. You got all the U.S. indices that we track trading the upside. Dow, 490 points. The S&P 51, 184 for the NASDAQ 142 for the Russell, nearly 2% there. 2 7/10% for the Trannies. They're up 418 points, 126 for the semis. That's 2.25%. NASDAQ Composite is up 175 points out there. Gold trading out at $33.91. That's off $13. Silver, $37.84 is the print. That's up 6 pennies right now. Light sweet crude off 23 cents. Printing at $63.73 out there. I've got the charts of Adobe up on our screen out here. I got an email this morning from Sat P, who's always looking to take buy a few shares and some instruments out there. Well, Sat, if you didn't listen to the show yesterday and you're listening today, Adobe is one of those. That's not the two requests, which we will take a look at. But when you take a look at Adobe out here, you've got a TD9 count bottom. That was tested and rejected yesterday. Now, the volume, let's check out the volume. The volume, 4.6 million shares was tested with 4.3. So you had a test rejection of a swing point with light volume. That's a buy signal. You've got a TD9 count bottom. Now what we're seeing here with the move lower this morning, we're seeing what looks like a bullish engulfing candle that would confirm a Rhodes momentum indicator bottom. So here's an instrument for you to add a few shares. Now, there's still going to be a battle, and that battle's going to be at 341.23. That is the bottom of its daily profile. If price can clear that, you're off to the upside. The weekly also is trading below profile support. It's going to complete a TD9 count bottom pattern this week on Friday. Now, it also has a Rhodes momentum indicator signal present. A bullish reversal candle would create a Rhodes momentum indicator bottom similar to what we may get today on the daily time frame for Adobe out there. Here, clearing the 344.14 level would say we're off to the races to the upside. That upside being 360.64, 376.16, 380.51, 416, and 419.82 out there. The monthly time frame chart has a buy the D point pattern that was formed with this Three River Morning Star pattern situation out here. Now, volume on that candle for April of 2025, was 89 million shares. So far this month, we're the 12th. We're almost halfway through at 31 million shares. So you can see we're coming in even lighter. We're testing that. We're going to get potentially a rejection of a swing point on a monthly basis with lighter volume as well out there. So Adobe is something for you to take a look at and to consider. With regard to other instruments that show up on my screen out here, I don't really see much with regard to what this is here capturing is TD9 count signals out there. So let's do this. One of the requests that I typically get that I'm unable to fulfill most mornings because it uses a different data feed is to take a look at some of the international markets. So let me do that here. Lots of requests that came in. So let's start with taking a look at, now we're going to look at all five together, basically, internationally speaking. Now, this is a snapshot that was taken probably about an hour ago, but that's not going to affect the Shanghai, the Hang Seng, or the Nikkei. If you take a look at the Shanghai out there, no topping pattern, price traded above its green oscillator and change line. It has a Rhodes momentum indicator signal that's present. That says that you would need a bearish reversal candle to confirm a top. Short of that, it should continue to rally further. The Hang Seng wants to go target its oscillator and change line. That's up at the 25,176 level. Today was a second day of a rally. I would expect it to rally for the next couple of days and move up towards that 25,176 level. The Nikkei closing at a new all-time high today, taking out a prior top. It has no topping pattern at all in place. It does have a Rhodes momentum indicator signal present, but again, that needs a bearish reversal candle to confirm a top. The Nikkei should continue its rally. The FTSE trading in a sideways consolidation pattern. Price is likely to go target 91.69. That's its oscillator and change line. It may have already done that in the last hour, but if not, it should target that. If it get above that, the top of its consolidation pattern. And finally, when we take a look at the DAX out here, the DAX is struggling, is trading below its green oscillator and change line. It has lost momentum, and I'd say likely to move lower. Now, this will be day number 3 in a row to the downside for the DAX, so you could get a couple bar rally out there. So that's the first set of charts that typically is requested. The next one is really to take a look at the U.S. dollar index. Again, this is a snapshot from about an hour ago. If you take a look at the U.S. dollar index, if you look at the weekly time frame, you can see that price is trading with inside its bullish structured profile. 2 weeks ago, price found resistance at the top of that profile, 99.02. That's a resistance level to be paying attention to. Why? Because a close above that ought to take us to 100.31. That's its TD9 count breakdown resistance area. You close above that, you are off to the races to the upside. The daily time frame had a sell the D point pattern. It was formed with that bear sash candle. That took price right back to support, which was the top of the profile. The dollar on a daily basis may have bottomed, and as long as price remains above its oscillator and change line, right around 98.20 or so, you should see a further rally. The monthly chart is the one that has not completed an A to B equals CD pattern to the downside, so don't have a bottom pattern there just yet. But here's something that's of interest. I hear a lot of people talking about how they expect 2026 to be a down year for the dollar out there. Okay, they're not looking at the same charts that you and I are looking at. And all we're trying to do is understand the probabilities here. And then we're looking at the very bottom panel of the screen. The very bottom panel of the screen is measuring consecutive years to the upside, black digits, and consecutive years to the downside. If we go back to 2008 out there, you will see that every year, take a look at those arrows, every year where we've had a down year, by the way, we are going to have a down year this year, is followed by what? A rally. So since 2008, every down year has been led by what has taken place. The following year is what? A rally, a 2-year rally out there, except for this one here in just 2 years ago. We just got that 1-year rally. So you tell me, what are the odds that the U.S. dollar index is going to move down in 2026 versus rally for the next couple of years? My money is on rally for the next couple of years with regard to the U.S. dollar index. So those are the charts that are typically asked for. I don't usually get a chance to get to them. We did today. Now we come back to this break. Let's start our request out there. LAR, LAC, the Qs, IBM, Uber, BTMD, Workday, Team, Tesla, BBAI, CRWV, ARWR, and hopefully a few more. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. Let's start with our first request. This actually came in yesterday afternoon from Yvonne, or yesterday morning, late morning. By the time it got to my email from Yvonne, want to take a look at the lithium Argentina. LAR is a ticker symbol here. Had one heck of a day yesterday. That day yesterday generated an A to B equals CD pattern to the upside, taking out a swing point on the daily time frame from back on July 25th that had volume out there of 2.2 million shares, taken out yesterday with volume of 9.2 million shares. I show you the A to B equals CD pattern out here, Yvonne, on the weekly time frame chart. It's got a 1-to-1 price projection of 408. I would expect or anticipate this will do more than a 1-to-1 A to B equals CD. You may ask the question why, and Stevie will answer it. Number one, reason why is because of the explosive move off of the C point of the A to B equals CD pattern. Number two, that explosive move has got it well on the left-hand side of that C to D leg. That says we should do more than a 1-to-1, and odds favor that retracement. I haven't calculated that retracement. My system isn't going to do that. That looks to me visually like less than a 0.618 retracement. Another reason to expect or anticipate more than a 1-to-1 A to B equals CD pattern. Now, on the daily time frame, it did trigger a Rhodes momentum indicator signal. And if we were to see a bearish reversal candle, that would at least identify a short-term top, and that could then take price back to support, which would be about $3.17. Yvonne, I forget, I didn't write down what your request was other than the instrument. It might have been for an entry. So, other than playing a game of a chase out here, you'd be looking for some type of a pullback. That pullback likely just simply a 2-day pullback. Today may be day number 1 out there. So if you get a second move to the downside tomorrow and you're looking to buy a few shares, that's something to consider. The weekly time frame chart, by the way, the volume on its swing point has had volume of 10 million shares. Again, that was the week of August the 8th out there. So far for this week, it's only Tuesday. We're at 10.5 million shares. So the weekly is going to have a confirmed A to B equals CD pattern to the upside. Monthly's moving into a swing point that has volume of 44 million shares, and we've got volume so far of only 17 million shares, but it's still early in the month out there. So LAR, I should complete at least an A to B equals CD pattern to the upside, the 1-to-1 version, but more likely than that, do more than a 1-to-1 A to B equals CD pattern. Let's look at your next request out there. That next request is to take a look at LAC. LAC is, what is LAC? Oh, geez, Stevie, what did you just do? So trying to stop it. Trying to be Mr. Smoothie. Turned out you saw that this is a Lithium Americas Corp out there. So Lithium Americas Corp, not looking as strong as the first one, LAR. So what do we have here? We've got price that is, it's got a bullish profile change in trend. So we know that because we've had price above the top of its profile for more than 2 consecutive sessions. So in this instance here, to the extent you're looking for an entry point, this is day number 1 to the downside. I'd let this get to day number 2 to the downside, while in that buy zone, I would say right now is between 276 and 281. 276 being the top of the daily profile, 281 being the oscillator and change line, which will change should price move to the downside out there. So that's what I see. The weekly time frame, just a consolidation with inside its bullish structured profile. It's signaling to you that its intent is to make its way up to 346. It ought to be able to do that. It will accomplish that task as soon as price can get out of the bullish zone of its monthly profile, and that's between 242 and 304. So a close above 304 on a monthly basis is going to get us up towards 427. But back to the daily chart out there, I'd have to say, if you're looking to take a long position here, and this is going to follow, I don't know how this tracks LAR out there, but I would say that would be in that 276, 281, 2-day pullback kind of rule out there. So hope that helps you out, Yvonne. Thank you. And that was for LB as well, who wanted to look at LAC. So that was a twofer. Thank you both for your requests, and thank you both for waiting. Joe wanted to look at the Qs out here, the QQQ ETF. So let's go ahead and pull that up on our screen. And the Qs right now are at a new all-time high. So we've got no topping pattern. The weekly chart is going to negate a sell the D point top with a close this week on Friday above 574.63. The monthly chart is strong like bull. No topping pattern whatsoever. In fact, the monthly chart would need a bearish reversal candle to confirm a top. Now, this is going to be perhaps bar number 5 or month number 5 to the upside. In the case of the Qs out there, that's a pretty common number, Joe. If we take a look at the if we take a look at instances when we've gotten past bar number 4, we go back to here to the July of 2023. That was bar number 5, led to a 3-month move to the downside. We then get back to March of 2024. That was just 1 bar to the downside out there. So we do have some examples of 5-bar moves to the month side, and those have at least always led to at least a 1 to 3 month decline out there. So we're likely to continue to see that pattern unfold out here. But the Qs, everything looks very good. Now, the interesting thing about that is, let me do this here. Let me pull up, because the NDX 100 yesterday formed a sell the D point top or Rhodes momentum indicator top. I can't recall which one, but we're going to find out here. It was the only instrument inside the Qs. That's what I'm going to get to. Stop talking and just do it, Stevie. I can't really just stop talking and just leave dead silence here, right? This should pull up the 4 different instruments that we take a look at with regard to the NASDAQ 100. Perfect. And one of those is going to be the QQEW, the equal-weighted ETF, which is the one that is pointing to a problem sign. But maybe that problem sign is not going to take place until we get to that 5th month of rally out here. When we take a look at the NDX 100 itself, you'll see that yesterday was a bearish dark cloud cover candle. That was confirming a Rhodes momentum indicator top. A close today above that yesterday's high, 23,698, negates that and says we continue to move higher. In other words, there'd be no topping pattern on the daily, no topping pattern on the daily NQ, the daily NDX 100, the daily Qs out here. Well, the daily NQ needs to close above its all-time high. The all-time high out there is at 23,845. We're trading at 23,850 right now. So if we do close above that 23,845, it negates the daily sell the D point top. And the only instrument of these 4 that would have a topping pattern in place would be the QQEW. This really, what this does, Joe, is goes along the lines of what we looked at. Expect a 5-month rally out there. In other words, the top should take place at some point in time, either towards sometime between now and next month, early next month out there, I would say. And we know that September is always a difficult time in the markets. Let me do this here. Give me a second to pull up Next out here. Let's just go. I say one thing. I always like to, the one thing that is for sure, when you do listen to this show, you're getting the honest truth out there. And what I do is when I do say things, I really try to back it up and prove it. Don't just give you numbers like they're willy-nilly out there. I'm not saying others give you willy-nilly numbers out there. I don't know what they do. But in my case here, I back up everything so that you can make the decision with regard to how you use that information. Here now that I've got this up, let me pull this over. Here's the S&P 500. Here's the 97 years worth of data. And we know that September is a horrible month out there. So all of that going along. And if we put up the Qs, let me just do that. Well, let's put up the NDX 100. That would be better out here. I think we'll have more years worth of data. So that should be NASDAQ 100. What do we have out here? We got 39 years worth of data. And so September's always its difficult month as well. So we've got that pattern, right, of the 5 months, just like we looked at with regard to the U.S. dollar, which Mr. Bill pointed out. Since 2000, it's been pretty simple to calculate what's going to happen after 1 year's move lower in the U.S. dollar index. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. So general market conditions out here, if we take a look at the advanced decline oscillator for the New York Stock Exchange, you can see it's printing just above the zero threshold level, 9 and change out there. A close above that today and a second close tomorrow, along with the spot VIX index, which is trading well below its 50-day exponential moving average. The 50 days at 1759. The VIX is at 1499. If we get both of those things in concert, a combination with as well as topping signals falling on some of the indices out there, we're likely to see this rally continue higher. Now, the New York Stock Exchange, you can see, is traded as rallied right up into that green oscillator and change line. The actual print on that is 2668. If we get a close above 2668 today, the New York Stock Exchange, with the advanced decline oscillator being above zero as well, odds favor that the NYSE is going to rally back to its all-time highs, its Rhodes Momentum Indicator top out there. So those would be, we have not had, really since about July 24th, we've had this choppy-ish type of market, choppy-ish to move higher out there. We've had the spot VIX below the 50-day, and we've had the New York Stock Exchange advanced decline oscillator below zero. And that's been giving us these choppy conditions out there. When both indicators are either flashing to the upside or the downside, that's when you really get some nice moves out there. Not that we're not having some nice moves today as an example, but that's what's going on, generally speaking, with regard to the market. Now let's go back to our requests out here. The next one coming in from Mohammed, who wanted to take a look at IBM. We take a look at IBM. IBM is trading down and testing a key level of support right now. It's its third breakout level in the daily time frame, and that's at 234.34. The weekly time frame chart, which has got a TD9 count, Rhodes Momentum Indicator top, is also approaching its breakout level, and that's at 232.07. Do we see any kind of a bottom out here? We most certainly do not. Maybe. Now, can be a bottom, as you know, getting back to the breakout level. But and we do have a wave number 7 signal out there. That requires a higher low to take place on the daily basis in order to confirm that pattern. But right now, you've got on a monthly basis, we have volume of 12 million shares. The swing point that, in essence, it's really moving into has got volume of 31 million shares. So that's nice. It's possible that 232.07 will hold. The monthly chart has got support or a buy zone between 206.05 and 219.47 out there. So that's what we see. We take a look at IBM, Mohammed. You also wanted to take a look at Uber. So let's go ahead and take a look at it. Trading out as we speak right now at about $91.82. It is traded above the top of its daily profile. It is traded above its green oscillator and change line. It had already formed a buy the D point pattern a couple of weeks ago when it formed that nice bullish hammer candle out there. Price should continue to rally. The weekly time frame chart shows Uber trading above profile resistance and its green oscillator and change line. Those are bullish conditions. It should further its rally as well. The monthly time frame needs a close above 93.60. 93.60 is its Rhodes Momentum Indicator top. That was that bearish shooting star candle. It was tested this month. And if it can close above 93.60, Uber's giving you signals on the daily, weekly, and monthly time frame that it's off the races to the upside. Right now, 93.60 is your key level of resistance. So, Mohammed, hope that helped you out with regard to Uber as well. We had a request this morning from Brett. Brett was up, the early bird catching the worm out there, and trying to catch the worm is on BTMD out here. And Brett has identified that this is going to go ahead and confirm a daily TD9 count bottom pattern today. It'll complete that pattern tomorrow. So it most certainly is a candidate for a rally. Now, this one here, and I'll say, Dan, you're listening in? Do some of your option work out here. Odds favor. There's a high probability. It's not 100%, but it's way up there. It's not a coin toss. It is way better than a coin toss. Odds favor when we get a TD9 count bottom pattern or Rhodes Momentum Indicator bottom pattern out there. What we see is price will rally up towards its oscillator and change line. That looks like a pretty good move out there. 290 to 354. So if that were the case, Mr. Dan inside ABCD inside the Tiger's Den could probably figure out what option trade would be suggestive, and that could be for everybody inside the den as well out there. But yes, Brent, you're right. On a daily time frame, price is pulling back to that level. Now, I know what you're also taking a look at is how price is dealing with two different swing points. There's a swing point that formed back in January of 2023. That had volume of 2.5 million shares. We got down to, that's as low as 276. As you pointed out, we've been down to 275, I should say, is that low. We've gotten down to 276 this month out there, 1 penny away. Now, the volume so far, and we are less than halfway through the month, is over 2 million shares. So 2 million shares is going into 2.5 million shares. Seems like heavier volume to me on a monthly basis. And that would suggest at least testing that low at 275. The other swing point that price is trading into is the one that's from back in July of 2022. That had 950,000 shares. So I'm not sure what, if I take a look at this, if I open up the monthly time frame chart out there, really no data back in this early stage here. But on a monthly time frame, other than getting back to those swing points, we really don't have much to go on with price being below both profile and its red oscillator and change line. No options out there. Thank you, Dan. If we take a look at, that actually kind of makes sense. If we take a look at the weekly time frame chart, it has a Rhodes momentum indicator signal that's been triggered, but it needs a bullish reversal candle to confirm its bottom. On the weekly basis, the swing point that you're looking at out here, which is January, the low of January in 2023 out there, that had a volume of 1.7 million shares. And last week you moved into it with 1.4 million shares. So you're moving in on lighter volume. This week so far, it's only Tuesday, but we're at 569. So I can't really, I'm not smart enough. I'm not intelligent enough to do the math that quickly on what we're doing, what we're kind of doing on a weekly basis out there. But it looks more likely to me, Brent, that maybe this wants to go after that swing low from back in July of 2022 out there. But that doesn't mean that we can't get a rally up towards that oscillator and change line in that 354-ish area out there. So a good spotting. That's the additional data that I can provide to you. I hope that assists you. But if there's something else that I overlooked, please let me know, and I'll be happy to get that for you. Let's move on to our next request, which was coming in from Sat P, who wants to take a look at adding a few shares or buying a few shares. And the first instrument that Sat is interested in is Workday, WDAY. Now, Pat, I'm sure you wrote that in there because you knew that today was going to become bar number 9 of a TD9 count. You can also see you've got a Rhodes momentum indicator signal that is present. And if we were to get a bullish reversal candle today, you could get a bullish hammer candle. It's not present at the moment, but you could get that. And if we did, then you'd have a Rhodes momentum indicator bottom. Now, at a minimum, that would take us up towards the oscillator and change line at 221.64. And above that, we probably get to the 235, 237 level. While the daily time frame for Workday is trying to form a bottom, the weekly is testing profile support. We're actually trading just slightly below it, which is 212.90. We're at 212.23. We're also trading into a swing point Sat on the weekly basis that had volume of 18 million shares. We're doing it so far with 6 million shares. Pulling back with pretty decent volume out there. But you're going to get that daily TD9 count that's going to confirm today, complete tomorrow. If you're looking at a few shares out there, that would be the pattern. And then you'd be watching to see if you can get above that 221.65-ish level out there. Steve Rhodes with TFNN. We'll be right back. We'll look at Team, Tesla, BBAI, CRWV, and ARWR.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Let's take a look at TEAM. This is also for SAT-P, also interested in buying a few shares. And, of course, SAT, following the TD9 count system. Now, you completed a TD9 count bottom pattern yesterday. So that was your signal should you want to add a few shares. You knew it closed out that trade with a close below yesterday's low. Yesterday's low, by the way, is 158.02. The reason why you would close it out is because that would have been the reason to have gotten into the trade. What team should do is rally up towards its oscillator and change line. That's at 175.52. If price is able to get above that, then we ought to see a move up towards the bottom of its profile, 184.48. The weekly time frame chart does not have a bottom pattern. In fact, this B point of an A to B equals CD pattern that formed out here, the B point we'd be looking at, it's actually labeled B as one of the Chapman wave tools out there, but that's the swing point from April 11. 16.6 million shares was passed with 21 million shares. Team confirmed an A to B equals CD pattern to the downside on a weekly basis. It's a doozy out there. That says that what team wants to do over time, let's go see what this pattern says out here. Let's put it in, see where it takes us to. Let's see where it takes us to. It takes us down to $88.81 out there. If we look at the monthly time frame chart, monthly chart is trading below a monthly swing point. That's a swing point from April of 2025. Volume there, 52 million shares. So far, we're down below with 30 million shares. This has got volume to the downside, Sat. So it looks to me like what the daily TD9 count bottom pattern is all about is nothing more than a 2 to 4 bar rally before it resumes its move to the downside. And as long as price remains below that red oscillator and change line, that will remain the pattern that is in place out there. So if you're asking me which of the 3 charts, because you didn't ask about Adobe, do I like, I'd have to put Adobe as number 1, and then Workday as number 2, and Teams, I say don't look at Team. This has got too many. Now, not that it can't turn here, but it's just got too many potential volume issues to the downside out there, and this could easily be just a counter trend move. Let's go take a look at Tesla for Rahul inside the Tiger's Den. Tesla is trading out at, where are we at here in Tesla? We are at 338.49. So when we take a look at Tesla, we know out here is we've got a consolidation pattern. Let me extend out the weekly time frame chart out here. And Tesla should at least go test the top of that consolidation. That's going to be at the range, I would say, would be from 354.99. Maybe it gets all the way up to test that shooting star candle at the 367.71 level. The monthly time frame chart for Tesla is in rally mode. And what I mean by that is prices trade above its green oscillator and change line. That's a bullish condition. And trade above profile resistance, 304.62. On a daily time frame, we've got a maybe an A to B equals CD pattern. Let's check this out here. I think that's what we were looking at yesterday. Let me just test the volume and just open up the chart. So we had a swing point from July 21st. The volume there, 75 million shares. The high of that was 338. Yesterday's close was 339.03. 105 million shares took out 75 million shares. Tesla has a confirmed small A to B equals CD pattern to the upside now. That was confirmed yesterday. I'm just simply going to move the A to B line over to the C line out here. Do this momentarily. Try to do this momentarily. Okay. Someone is testing Stevie's skills out there, and we're seeing that Stevie's skills on the grab and drag isn't so good. Okay, so Stevie's going to do this another way. How am I going to do this? I'm going to just do it kind of like this. That's approximately, let me see if come on, let me see if I grab that. There we go. Will this one grab easier? Oh, there we go. So you've got an A to B equals CD pattern to the upside. You're getting pretty close to that price point, which is 347.33. We're not there just yet. But what you would need now is a bullish or bearish reversal candle to confirm a top. Prices along the left side of that C to D leg out there, Rahul. So it looks to me like unless we get a bearish reversal candle, Tesla wants to continue its rally. That's based upon the daily, the weekly, and the monthly time frame chart. And maybe at the top, that consolidation is where we really find resistance. Let's go take a look at BBAI. That's a request from Nitram inside the Tiger's Den. BPAI is trading out at $5.36. BPAI is confirming perhaps an A to B equals CD pattern to the downside. The B point on this was from back on August 1st, volume 73 million shares. So far today, we're at 128 million shares. So there's a confirmed A to B equals CD pattern to the downside. Let's go measure that one. Let's just take the more conservative approach here. There is our A to B line. Let's see if we grab it. We got it, copied it, pasted it, we're moving it, trying to move it. Trying to move only the line, not the entire screen out there. And then yesterday looks like it was the high. So it is now attained the 1-to-1 price projection level. We started off taking a look at something. I don't remember what the instrument was, but I said, based upon that the instrument would do more than a 1-to-1. And the first thing I said was based upon how you come off of that C point. Well, yesterday was the C point of the A to B equals CD. Gigantic gap to the downside, ginormous out there. This suggests lower price and more than a 1-to-1. A to B equals CD. I would say that BBAI, more likely than not, is going to go target the 374 level. That's its daily TD9 count breakout area. Now, when we look at the weekly time frame chart, let me just confirm where the profiles are at. So 517 is the top of the profile, and that's where prices pulled back. So it has found support so far. It's only a Tuesday on the week at the top of that profile. That I would say is more likely why you're seeing that little bit of a bounce out there, because price hit that resistance area, which are really support level. And if price closes below 517, odds would favor a move back to 416. On a monthly basis, price is back inside its profile level. That was under 577, so those conditions are supporting that further move lower. 517 is the number out there. If we close below 517, we very likely get down to the 416. I would say in reverse, 374 to 416 level. That's what I see, Nitram. I'd have to really go down to look at the intraday chart, see if there's anything else there out there with price hitting that weekly support level. But I'll leave that for work that you can do. In the meantime, Bob in Spokane wants to take a look at CRWV out here. CRWV came public just a few months ago, so we can't really use the monthly chart, the weekly. And this is beautiful. It makes a IPO right around March 28th, and it really forms a TD9 count top in the week of June 20th. They completed that pattern the following week out there. Now, when we take a look at the daily time frame, because we've got just small amounts of data, so I'm putting this together with regard to what the message of the markets are. We really got to use the weekly and the daily here. And the weekly and the daily says I bottomed. Why? Because you form a TD9 count bottom on July 30th out there. Price now is trading above its TD9 count breakdown area. This could be day number 2 above that level, 134.30. That's telling you the move is real. What do you mean the move is real? I mean, the move is real, and it really wants to move even higher out there. Now, I don't have really a resistance level for you on that weekly time frame. What I would be watching is probably the swing point low. That's a swing point from June the 20th out there, and that low is at a price point of 143.48. So that is very likely the price target, 143.48. The volume on that swing on a weekly basis is 103,000 shares. This week so far, we're at 28,000 shares. Seems like pretty decent volume this early in the week. Bob, when we come back from this break, we're going to look at ARWR for you and OKLO for ELO inside the Tiger's Den. That probably will take us to the end of the show. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Mimi and Greg, I see your requests that came in. It looks like you may have sent them in early, as I had asked. Mimi, yours 11:13. Greg, yours 11:17. I didn't get those requests until just now. That's the issue with regard to ISPs out there. I will get to your request in the morning. But in the meantime, tomorrow, in the meantime, we're taking a look at ARWR. This is for Bob in Spokane. Bob, ARWR is trading above profile resistance on the daily time frame at 1732. 2 consecutive closes above that as generates a bullish profile change in trend. 10. Says price wants to go make a run for its all-time, well, I don't know if it's not an all-time high, but its most recent swing point from July 18th. That had volume, that candle of 3 million shares. Today, so far, you're up into this candle with 590,000 shares. But closing above and above profile resistance, trade above a green oscillator and change line, those are bullish conditions. The weekly chart says, hey, as long as you can handle my profile resistance level at 782, meaning stay above that, I will rally further. So that's your real resistance level, is going to be that weekly profile level at 1782. Stay above that, and we're likely to rally further. Rally further to where? Well, I would have to say back towards that swing point high out there. And if you can get above that swing point high, let's see, if it was at the swing point at 1993, yeah, it looks like it was. If you get above that, then you move to 2131 out there. Wave number 7 bottom is what I see on the monthly time frame. This wants to rally up towards profile, and that's in between the 2285 and 2721 level. So that's what we've got for ARWR for Bob in Spokane. We're going to finish this off with Electric Light Orchestra. Take a look at OKLO out here. That is trading right now at 75.53. It has a daily Rhodes Momentum Indicator top with price consolidating with inside its daily profile. That range is 62.73 for support and resistance at 78.13. The weekly time frame has a Rhodes Momentum Indicator top as well. That would be confirmed with a close above a stark cloud cover candle, and that would be $80.42. Even though it has a top, prices above profile resistance and its oscillator and change line, that means it's a neutral signal. So watch 78.13, 79.25. It looks like that's where Oklo wants to go rally towards. Folks, thanks so much for joining me today. Have a terrific Tuesday. I'll look forward to seeing you tomorrow on Wonderful Wednesday. Take care and be very safe out there.